I'm Marilla Fernandez. Welcome to Market Call. Rick Rule will be on the show. He's president and CEO, Rule Investment Media, and he'll take your questions today on natural resource stocks. Here's how to reach us. 1-855-326-6266 is the number to call. You can send us an email as well, marketcall@bnnbloomberg.ca. All right, let's bring in Rick Rule. Rick, thanks for joining us today. I know markets have had record closes as of Monday, but you're seeing weakness in some metals. Tell me about that.
Well, I think the weakness in metals has to do with a perceived weakness, which is probably accurate, in the global economy. In addition to seeing weakness in the metals, you're seeing weakness in the energy complex, despite continuing fears about conflict in the Middle East. That would say, in terms of the metals, that people are afraid of economic slowdown sometime in the future. In terms of energy, what I think you're seeing is a real-time slowdown. Demand for oil and gas, the weak prices for oil and gas, despite the conflict in the Middle East, says an awful lot about the state of demand.
Okay, so I also want to get you on the trade deadline that's coming up July 9th. We don't know sort of what Donald Trump will do, whether he will impose tariffs on some countries, whether he's still negotiating with others. Do you feel like that could have a compression on prices even more?
I do. Tariffs are taxes. In the United States and Canada, we are overtaxed. Tariffs also obviate or make trade more difficult, and trade makes us richer. I don't think Trump actually knows what he's going to do, which is, it makes it difficult to forecast. My hope is, and by the way, I've read his book, The Art of the Deal. My hope is that this is mostly posturing. He makes outrageous demands so that he has a very strong position to retreat from. That's the best that one can hope for.
What else are you keeping an eye on this summer? Besides that trade deadline, what else are you watching?
Well, in terms of the gold price, the so-called big, beautiful bill in the United States, which is big, but it's certainly not beautiful. The arithmetic around the U.S. dollar is very, very, very bad for the U.S., and I'm afraid to say very, very good for gold. The on-balance sheet liabilities of the U.S., the debts we owe to bondholders, are about $36 trillion. That's dwarfed by our off-balance sheet liabilities, the net present value of unfunded entitlements, which exceeds $100 trillion. Those numbers are growing by $2 trillion each, respectively. My belief is, I've stated this before on BNN, that the only way to honor the nominal value of our entitlement obligation is to reduce the purchasing power of the U.S. dollar, much like in the decade of the 70s, when, according to the Office of Management and Budget, the U.S. dollar lost 75% of its purchasing power over 10 years. Note that I'm not talking about the relative strength of the U.S. dollar. I think the U.S. dollar will do okay relative to other currencies. But I think in absolute terms, the spending power of the U.S. dollar falls. And I think this budget bill is a classic example of Republican and Democratic log rolling in the United States. I think the circumstance just gets worse. Although that's bad for the economy, it is bad for the citizenry. It is very, very good for gold.
Okay, what do you mean by log rolling?
Log rolling means that there isn't a constituency in Washington for reducing spending. There is only a constituency for advancing the interests of one's own district. There is nobody out there in the American political spectrum, with the possible exceptions of Amash, Massey, and Rand Paul, that to favor the type of budget cuts that would be necessary to restore the balance sheet of the United States. Log rolling refers to a circumstance where the Democrats capitulate to the Republicans when the Republicans capitulate to the Democrats, which is to say when all spending resolutions advance. And that's the circumstance that we have. In addition to that, we have the continuation of a tax cut without any reduction in spending. That's basically fraud.
Yeah. Okay, we do have to leave this part of the conversation. We are going to let up some phone calls and emails for Rick Rule of Rule Investment Media. We're back in a moment. Welcome back. Rick Rule is with us today answering your questions. We're going to start with an email from Ralph, who says, thoughts on NovaGold. It's a very short and sweet email. Rick, what are your thoughts on NovaGold?
Short and sweet answer. It's a leverage call on gold. It's a very, very large undeveloped deposit with very high upfront capital costs. Really, it's all about the gold price. If the gold price continues to do well, NovaGold will ultimately find a partner to put this thing in production. If the gold price doesn't do well, NovaGold will be a value trap.
Okay, so we will leave it at there. That is definitely something to think about. Let's move on to the phone lines. Sam's on the line in Toronto. Hi, Sam.
Hi. The silver is lagging gold quite a bit, and what do you think about the silver market, especially the ETF, PVR, the iShares ETF? I would appreciate your opinion. Thank you.
Okay, Sam, thank you for the question. Rick, a lot of people are saying that gap is going to close sooner than later. What do you think?
I'm sorry, I didn't understand the question, Morella.
He wanted to know about silver, and will silver sort of close that gap between gold? It's been lagging behind.
In my experience, silver is a late mover in a precious metals bull market. When the generalist investor is attracted by the momentum established by gold and comes into the precious metals market, generally leadership changes from gold to silver. I would expect that to occur because I believe that we're in a very durable precious metals bull market. It might not happen for a year or two, but believe me, you won't need me to tell you when it's occurred. Silver is extremely volatile to the upside when its time comes.
Got it. Okay, Sam, I hope that helps you out. Let's move on to Chris, who's calling from Victoria, BC, with a question. Hi, Chris.
Oh, good morning, Morella and Rick. Rick, I'm hoping to get your opinion on Glencore. I see it as undervalued, and it's got a nice low from where it was. Maybe a good opportunity today, and if not, maybe an alternative. Thank you so much.
Okay, thank you for the question. Glencore.
I'm an owner of Glencore, along with Rio and BHP, the big base metals producers. I like Glencore because they didn't abandon the coal business. They doubled down on the coal business, made an awful lot of money. Very, very, very smart guys. Leverage certainly to base metals, and I'm not indisposed to believe that base metals could stay soft for a year or 18 months as a consequence of global economic conditions. Looking forward, Glencore's collection of tier one mines in base metals, an industry that's seen systematic underinvestment for 30 years. I think it's a must-own natural resource stock.
Okay, so let me ask you, because I've pulled up Glencore here, and it started moving down sort of summer of last year. I'm just wondering if there was a specific trigger for that. Of course, it did the dive sort of March and April when everybody else was going down as well.
I think there were two triggers. One, the presumption in capital markets that we were headed into a period of soft economic conditions. The second, I think, had to do with concerns, ongoing concerns with regards to political risk in Glencore. Their portfolio consists of operations in a lot of countries that one would best describe as not investment grade. In addition, their very, very, very strong presence in coal has scared institutional investors, despite the fact that on a free cash flow basis, it's been a spectacular move. I'm not trying to suggest that Glencore is a market darling. I'm trying to suggest that they have a suite of projects that in the circumstance that's in front of us for the next 10 years will reward investors extremely well.
Got it. Okay, let's move on to John, who's on the line from London, Ontario. Hi, John.
Hi, Marilla. Hello, Rick. I would appreciate your thoughts on Ivanhoe. I bought it mid-single digits. Went up as high as $18 or $19. And it's pulled back possibly because of demand weakness or weakness in the underlying commodity prices. What do you think of Ivanhoe for a 3 to 5 year hold? Thanks very much.
Okay, thank you for the question. Let's have a look at Ivanhoe's chart here. They are currently at $10.66, quite down sort of for the year. What's your take on this, Rick?
The stock fell precipitously because of underground stability issues at their Kakula mine in Congo. That operation is temporarily suspended while they try to fix that problem. I suspect that the problem is one that will last 6 to 8 months. I suspect, too, that part of the answer involves less aggressive underground mining, which is to say the remaining in place of more ore in pillars and much more extensive backfilling. Looking longer term, the Kamoa-Kakula complex is nowhere near maturity in terms of copper production. They are bringing on the world's largest platinum and palladium mine, the Platreef, and they are also bringing on the highest grade zinc mine in the world. The only reason why somebody wouldn't own Ivanhoe Mines is if somebody is afraid of the not insignificant political risk, both in South Africa and also in Congo. Note that I'm a very large holder of Ivanhoe. I've been investing in Robert Friedland's companies for 40 years. So there's a lot of bias in my answer.
Okay, that being said, do you have concerns about operating in those particular jurisdictions?
Congo has treated me very well, I have to say. I'm not trying to say that it's done it without trauma, but I've been investing in the Congo since 1996. Sometimes, if the technical aspects of the project are really, truly superior, you need to stomach political risk.
Got it. Okay, let's move on to George. George is on the line today from Gander, Newfoundland. Hi, George.
Hello. First of all, I'd like to start off by saying, Marilla, I think you do a great job.
Thank you very much.
Rick, I don't own it, and although I own several gold stocks, I've never owned Newfound Gold, and I think it was you that I spoke to about a year ago, and you kind of implied that it was overhyped, and I'm just like to get any information or any updates you have on the company. I thank you very kindly, and have a nice day, folks.
Thank you for the question. Rick, tell me a little bit about Newfound Gold.
I wouldn't describe it as overhyped necessarily. The stock got ahead of itself. But my problem, and I should say I don't own it, my problem is that I look at some very, very, very good individual drill holes. I can't tie them together to make a deposit. It might be that there's a series of small deposits, which combined will make a larger deposit. But I am unable, when I look at the cross sections, when I look at the plan view, when I look at the map view, I'm unable to tie the drill holes together to make a large coherent deposit. So I do not own Newfound Gold. Viewers should take note of the fact that my mentor and former partner, Eric Sprott, feels very differently. He's a very large shareholder of Newfound Gold. He's become a billionaire by being right. He and I have a difference of opinion on this one.
Okay, so what is his opinion? What is he seeing that's different from you? Does he think there's a large deposit?
I don't know the answer to that. Okay. I think he's attracted to the size of the concession. I think he's attracted to a number of high-grade hits. I think perhaps he believes that given access to sufficient capital and sufficient drilling density, that the difficulties I have tying drill holes together will go away as more drill holes are drilled. But I haven't spoken with him in the last year on the topic, so I don't know.
Got it. Okay, we will leave this block where we are right now. Rick Rule, of course, sticking around to take your questions on natural resource stocks. Here's how to reach us. We're back in a moment. Welcome back, and thanks for joining us here on Market Call. Rick Rule is our guest today. He's taking your natural resource questions. Mary's on the line from Burlington, Ontario. Hi, Mary.
Hi, Marilla. Hi, Rick. Thanks so much for taking my call. Rick, I'm wondering if you can tell me what you know about Ecora Resources. Thanks very much. I'll hang up and listen.
Thank you for the question. Ecora, Rick.
I should start by saying I'm a shareholder, so there are conflicts of interest. It's also a sponsor of my conference next week. Ecora is a sort of a misunderstood company, a collection of royalties around, built around coal, but where coal has become a much less important part of the royalty suite. What I like about Ecora is that they acquired a lot of royalties before that became popular, and the growth in the midterm is built in from projects that aren't generating cash right now, but our finance will come into production. So over 2 years, 3 years, and 5 years, the cash flow in the company is very well established. It's under-owned and unknown. So it's a stock that I'm personally very long.
They are in Australia, Canada, South America, anywhere else?
Not to my knowledge, okay, but that's off the top of my head.
Okay, so that's where their focus. We'll leave it at that. Hope that helps Mary answer her question as we move on now to Mark, calling from Gatineau, Quebec. Hi, Mark.
Oui, bonjour, madame et monsieur. I'd like to have your thoughts on the DML, Denison Mines. I see that Sprott is looking to buy probably double the amount of Yellowcake, and you think they're getting ready for next bull run on uranium. And by the way, Rick, you're not getting old, you're getting wiser. Have a good day.
Thanks for the question. Okay, let's have a look at Denison Mines here, currently at $2.46, a little bit down today. What's your take on Denison Mines?
Denison is a brand name for Virginia uraniums. I suspect that the uranium market will do extremely well for the next 5 years. They have a permitted mill, which is a very difficult thing to obtain. They have the second best database in the Athabasca Basin after Cameco. My only reservation about Denison is that their development project is an in situ recovery project that's deep rather than on surface. This is technology that I'm not familiar enough with to have any confidence in the outcome of. I own some Denison, but I consider the stock to be extremely speculative based on technology that I don't yet understand.
Got it. Okay. Mark, I hope that gives you some information you can use. We're going to move on to Valentine from Burlington, Ontario. Hi, what's your question today?
Hello, good morning. I have a question, please. I own shares in Whitecap Resources and ARC Resources. Both are oil companies. I would like to buy more if the oil prices remain stable in, let's say, mid-60s range. ARC is not doing so well, so should I buy both of them or concentrate only on one?
Okay,
Thank
the comparison.
You very much.
Thank you for the question. Comparison of Whitecap versus ARC Resources. They are both on the chart here. Whitecap a little bit under there. What's your take, Rick, on these two? Which one would you invest in?
I personally would shade to ARC. I consider it to be the best run intermediate size oil and gas company in Canada. I've owned it for many, many, many years. I would note, however, that on most fundamental metrics, Whitecap is cheaper. So it really depends on your own investing style. I am often willing to pay up for management that I believe is superior. And I'll repeat, I believe that the ARC management is the best management team in the mid-tier oil and gas companies in Canada. You can't go wrong with either in the 5 to 10 year time frame.
Is that because of LNG moving out to Asian markets primarily for ARC Resources?
It's because on a global basis, the oil and gas industry is underinvesting about $2 billion a day in sustaining capital investments. This will impact the world's ability to produce 2 or 3 years out. It also reflects what we hope is a newfound pragmatism among the Liberal Party in Canada, where your Prime Minister, Carney, who, while he is anti-carbon, is in favor of developing the Canadian economy, perhaps to generate the tax revenues that he needs to support his generous spending program. To the extent that the government gets out of the way of the oil and gas industry in Canada, the oil and gas industry in Canada will outperform every other oil and gas industry in the planet. Canada has the resources, it has the human resources, it has the infrastructure. The only thing that's been wrong with the oil and gas business in Canada for the last 10 years has been Ottawa.
Got it. Okay, we are going to get to Daniel before we have to take a break. Daniel's calling from Markham, Ontario. Hi, Daniel.
Hi, Marilla. Hi, Rick. May I have your thoughts on CNQ? Do you own CNQ? And if not, what other oil companies do you own? Thanks for taking my call.
Thanks for the question. Go ahead, Rick.
I do, in fact, own CNQ. It's almost like an index fund of Canadian independent oil and gas companies, active in the gas business, active in conventional oil, active in heavy oil, extremely well run. It will be another beneficiary should Ottawa develop a pragmatic attitude towards the Canadian oil and gas industry. It will be, as the entire industry will be, greatly aided by the increased exports of LNG or natural gas on the west coast of Canada.
Okay, so we will leave that there for CNQ. We're going to take a quick break. When we come back, we'll have a look at Rick's past picks. Back in a moment. Welcome back. Time now to take a look at Rick's past picks. These are from July 19th of last year, so July 19th, 2024. At the time, Rick, you picked Marin Energy on the TSX, previously known as Africa Oil. It was $2.47 at the time. It's dropped to $1.69, so a 32% return drop and a total return drop of 26%. They operate in Nigeria. What's been going on with them?
A couple things. They bought out their joint venture partner in Nigeria, and they've begun the process of, in effect, decapitalizing. They generate substantial surplus cash flow, which they are returning to shareholders by way both of dividends and buybacks. The market is, of course, as it should be, nervous about Nigeria. I suggested in my last interview that Marin was selling at probably a 50% discount to what it's worth. That discount has only widened. It's worthy to note that the control shareholders of Marin, who include the Lundin family and a private equity group, have been taking advantage of the normal course issuer bid and reducing their own shareholdings in the company. I would note, too, that I originally owned it as a consequence of it being run by a man named Keith Hill, who I had a high regard for. He has now resigned from the company. I would further note that I am and continue to be a large shareholder of Marin.
What are the challenges for operating in Nigeria?
Oh, boy. Well, legendary corruption, first of all, tough infrastructure. I would note that they're offshore, so that the social and political challenges that occur onshore don't affect them as much. But Nigeria is a very, very tough operating environment, largely because of political reasons and corruption. It's also an area that has enormous exploration upside. It's worthy to note that the Marin concessions, which were formerly controlled by Petrobras, haven't seen a big exploration spend for about 10 years. I own the stock because I'm hoping that a substantial part of the free cash flow from Marin goes into exploring the undeveloped potential of those extraordinary blocks.
Got it. Okay, let's get to your second pass pick, G2 Goldfields on the TSX as well. It was $1.59 July of last year when you recommended it. It's moved up to $2.85. That's a 79% upside return and also a 79% total return upside. They mine for gold and other things. Is this a continued hold for you?
It is. My reason for owning it when I picked it was that they've made a gold discovery in Guyana. And my belief is that they will ultimately merge with another Canadian issuer called G Mining, which owns about 2/3 of the same deposit. There has been some enmity between the management teams, so any merger isn't imminent. But those mines need to be developed. That gold field needs to be developed as one gold field. The merger won't come cheap because G2 has a couple of large strategic shareholders that will prevent any take under in the market. But ultimately, I believe that G2 is a consolidation play.
Got it. Okay, let's get to your last pick from last July, Kenorland Minerals. Am I saying that right?
Yes, ma'am.
Kenorland Minerals, $1.10 at the time you recommended it, up to $1.90 now. 73% upside for a return and total return. Where do they operate? And tell me a little bit more about the business.
Kenorland is a prospect generator, meaning that they use their geological expertise to develop large exploration concepts, which they then sell to other companies for a carried interest, laying off the project risk while allowing you to maintain your ownership in the intellectual capital, which is really where the action is. I would suggest that almost all of the market capitalization of Kenorland can be explained by a royalty that they have on a discovery in Quebec. Note that they operate in Canada and Alaska, but mostly in the greater Abitibi region of Ontario and Quebec. They just this week announced a new discovery in South Uchi. It's too early to tell whether or not this is an economic discovery, but the truth is that the company has one discovery in the bag and two discoveries in the mail. An unusual circumstance. Note, too, that as a consequence of utilizing other people's money for exploration, they aren't on the share issuance and dilution treadmill that most exploration juniors are. The company's extremely well run by a young man whose career I've followed for a very long time, long enough that I did business with his father 35 years ago.
Wow. Okay. And I wanted to mention, because it's already got so much upside, would you still buy in at where it is today?
If I didn't own Kenorland and I was willing to take the risk of exploration and endure the timeframes in exploration, both of which I am, I would absolutely buy the stock today.
Got it. Okay, we're going to take another quick break, line up some more questions for Rick Rule. He'll take your questions on natural resource stocks. Back in a moment. Welcome back to Market Call. Thanks very much for joining us today. Rick Rule is with us, and we'll go right back to the phone lines for Kevin, who's on the line in Calgary. Hi, Kevin.
Well, hi there. Rick, nice to see you again. Wanted to get your take on Barrick Gold, and specifically what you think if they did get things worked out in Mali, what kind of a lift would it give to the stock price?
Okay, thank you for the question. They're facing quite a number of problems in Mali from the military government there. Rick, do you anticipate it unwinding sooner than later?
The answer to that is I don't know. There seems to be a problem between Barrick and a couple of other Western companies in Mali. And I've followed it with interest, but I need to say I don't have a conclusion. Barrick has a couple of other problems, too. The continuing high operating costs in the northern Nevada goldfields that they share with Newmont, as well as their prospects for growth. Barrick has decided that they're a mining company rather than a gold mining company. They call themselves Barrick Mining rather than Barrick Gold now. That's really a function of the fact that an increasing amount of their revenues come from copper. And most of their growth will come from the Reko Diq development, a huge copper gold porphyry in Pakistan. Well, I personally like that project. The market doesn't like it at all. But near term, Morella, as you suggested, the market outlook for Barrick is largely contingent on what happens in Mali. And right now, that's really problematic. If the Mali situation resolved itself in a reasonable fashion, if the Malian government, as an example, honored their contract, you would see Barrick shares close considerably higher. But I have no idea what the prospect of that is in the near term.
Got it. Okay, Kevin, I hope that gives you some information you can work with. We're going to move on to Ghulam calling from Toronto. Hi, Ghulam.
Hi there. My question for Rick is on, Fortuna Silver or Fortuna Mining. And, Fortuna Mining.
Okay, thank you for the question. We'll have a look at that.
I'm a shareholder of Fortuna. I think it's cheap. These people are pretty good at the acquire, develop business model, starting in South America, now active in Africa and Argentina. On any fundamental basis, this stock is cheap. If I had a criticism of it, rather than having any one tier one asset, they have a collection of tier two assets. The market will continue soft as a consequence of operating in West Africa and also in Argentina and Mexico. But by any fundamental basis, price net asset value, price cash flow, price free cash flow, the stock is very, very cheap. And I do own it as a consequence of their implementation skills, their mine building skills.
Okay, so this is something you'd hold on to and hope for a bit of an uptick later on?
Yes, ma'am. I think their development pipeline is very, very strong. And I think the free cash flow 3 years from now, even assuming steady gold prices, will be much higher. I don't expect steady gold prices. I expect higher gold prices.
Got it. Okay, let's go on to Keith, who's calling from Beaumont, Alberta today. Hi, Keith.
Hello.
Hi, what's your question today?
I'm a first-time caller and long-time listener. My question to Rick is, I understand that I think he says Agnico Eagle is a premier gold company. What would he say is the premier gold/silver company? Thank you.
Okay, thank you for the question. Go ahead, Rick.
I'm tempted to say Agnico Eagle. They're good silver producers. Probably the premier silver company, silver-centric company, would be Pan American Silver. I consider Agnico Eagle to be the single finest gold mining or precious metals mining operating company in the world. And as a consequence of that, is the most valuable precious metals mining company in the world, despite not being as large on a production basis as either Barrick or Newmont. Agnico Eagle itself is part of what I would consider to be the golden triumvirate. Franco-Nevada, Wheaton Precious, and Agnico Eagle, I think, are the three companies that need to be in every single precious metals portfolio. Note that I'm a shareholder of Agnico Eagle. Note, too, that Agnico Eagle are executive sponsors of my Natural Resources Investment Symposium next week.
Got it. Thank you for making those notes. Let's move on to another caller. Chuck's on the line from Calgary today. Hi, Chuck.
Well, good morning. I'd like to find out about Rick's thoughts on ERO copper. ERO, I purchased it back in mid-April and on a dip, and it's been doing very well. And I think with the world copper situation and electrification, I'm probably looking at $5 a share more. What are his thoughts?
Okay, so we are at $23.91 today for this copper stock. Rick, do you like ERO?
I no longer own Arrow. It exceeded every level of greed I had twice. I owned it, I sold it, I owned it again, I sold it. I think in the 2-year time frame, Arrow goes higher. It's very, very well run. They have a very long life deposit and have a very good production pipeline. I sold it, as I say, because it exceeded all of the goals that I had for it. And I wanted to divert some money from the copper space back into the gold space in hopes perhaps to reload in copper at a later date. I have no objection to copper. I'm not going to give you a specific price target, but I don't have one. I would urge the caller to think in time frames longer than a year. When one is thinking about base metals, the global economic weakness that we seem to be experiencing could mean that it takes 2 years or 3 years. But I believe that this company becomes an earning machine in the out years, and I think that the market will reflect that.
Got it. Okay, Chuck, I hope that helps you. We have on the line Peter now from Vancouver. Hi, Peter.
Hi, thank you. The precious metal guru, Mr. Rick Rule, from the golden era of the 70s and 80s. Today, I'd like to ask your expert opinion on GGD, and also, can you give me the ratio of gold to silver? I understand the average is 50 to 1 and now it's 90 to 1. Thank you very much, Guru.
Okay, thank you for the question. We're looking at gold here, which is at $2.02 today. Can you tell me a little bit about it, Rick?
Yeah, GoGold is a gold mining development company active in Mexico. The management team has been successful with prior companies doing exactly the same thing in Mexico for 3 decades, and I've invested with them for 3 decades. I suspect that GoGold's discovery isn't a mine, but rather is a camp, several mines. As the caller suggests, at current gold and silver prices, the mine is 50-50, a gold producer and would be a gold producer and a silver producer. My suspicion is that if the silver price begins to outperform the gold price, that the ratio of revenue from gold to silver begins to favor silver. That assumes, of course, that my silver price outlook is correct. Irrespective of that, if you can afford the risk of development stage projects, and if you can afford the real political risks in Mexico as a consequence of the fact that the president of the country is sort of anti-mining, GoGold is a stock that you ought to own.
All right, we do have to leave it there for this block. Rick Rule sticking around to take more of your questions on natural resources when we come back. Stay tuned. Welcome back. We have Rick Rule with us today to answer your questions. Let's go to Eric. He's on the line from Kelowna, BC. Hi, Eric.
Hello. Rick, I was one main question, and basically it's Aya gold and silver, but I also want to ask about the outlook for silver in the upcoming year. Thank you.
Thanks for the question. We talked a little bit about silver earlier, Rick, but if you could expand on it.
Yeah, silver is usually a late mover in a precious metals bull market. I believe we're in a precious metals bull market. I believe that leadership will change from gold to silver. I certainly can't tell the caller when, but my experience tells me that that will occur. Aya Gold and Silver is a silver developer in Morocco, led by a team, Benoit Lassalle, that were responsible for a success called Semifo, which I really, truly enjoyed. It's a country that has done a company, that's done a great job in implementation, building their first mine. They're now building their second mine. So the revenue growth, the cash flow growth that we like to see is built into this company for at least 5 years to come. They've done a superb job in terms of the sociology of Morocco too, responding very quickly during the Moroccan earthquake, aiding the high Atlas communities that service their mine when the government couldn't get through to do that. A wonderful thing, and one that I think will pay benefits to them for generations in the high Atlas in Morocco.
Got it. All right, let's move on to Jim calling from Vancouver with a question. Hi, Jim.
Hi, good morning. I'd like your thoughts, Rick, on Solaris, SLS, Solaris Resources.
Okay, thank you for the question. Let's have a look at Solaris at $6.41 today. Rick, what's your take?
I'm a Solaris shareholder. I would caution people who don't have long time frames or people that can't take political and sociological risks that this is a very high risk, high reward circumstance. Their discovery is certainly a tier 1 discovery, copper gold discovery. It's in Ecuador, which is a challenging country, and it's in a challenging part of a challenging country. So one needs to be willing to take political risk, and one also needs to be willing to take a very long-term view of timeframes. The company is extremely well backed by very high-quality entrepreneurs who have done a very good job prospecting in frontier jurisdictions, bringing mines into production, and selling them in the past. But they'll have their hands full with this one.
When you say long-term, how many years are you talking?
I suspect that nobody should buy Solaris if they're not prepared to own it for 5 years. I suspect, too, that if you're prepared to own it for 5 years, that the share price that you might enjoy is a multiple of today's share prices. This is, by all indications, a tier one discovery, meaning in situ reserves and resources, recoverable reserves and resources in the $15 to $20 billion range, a deposit that would be in the lowest cost quartile worldwide, and a deposit that would generate best quartile returns on capital employed.
Got it. Okay, let's move on to Dean, calling today from Ottawa. Hi, Dean.
Hi, I was wondering what Rick's thoughts were on Discovery Silver, DSV, and do you own it?
Okay, thank you for the question.
I do own Discovery Silver. I own it more as a management play. It's done a good job because people anticipate a good silver market, and it is a good silver development project, albeit a silver development project in Mexico where there are permitting difficulties. The recent pivot of the company and their management team to buying one of the second-tier Newmont assets changes the picture of the company. It gives the management team a chance to do what they really do well, which is develop mines in the Abitibi district of Canada, and then using the free cash flow from that mine to finance the development of their Mexican silver project without any additional dilution. Note that I have done business with and invested with the management team of Discovery for 2 or 3 decades, for a very, very long time.
You mentioned a headwind with Mexico, with their current leader being, is it anti-mining or just not very supportive of mining? How would you phrase it?
I would describe her as anti-mining. I don't think that she is as free to be anti-mining as she would like, because mining is such an important industry in rural Mexico, and because she recognizes the need for economic development in Mexico. What she has said is that she opposes new permits for open pit mines unless the open pit mine enjoys substantial local support. In other words, she will support mining if she is forced to it, but in no other circumstances.
Got it. Okay, let's get to another caller, Russell, on the line from Montreal. Hi, Russell.
Yes, thank you for taking my call. Of the 3, I have Barrick, Agnico Eagle, and Alamos. Of the 3, which one would you add to? Thank you.
Which one would you add to? Okay, thanks for the question.
I always add to the best. If forced to choose, it would be Agnico, and Agnico.
All right, can you explain why?
Yeah, it's the highest quality producing gold mining company on the planet. It has enjoyed a very nice run, as you can see. But if you look at the net present value of their future cash flows at today's gold price, they are actually cheaper, having doubled, than they were 18 months ago at half the current price. I've known the company for a very long time. They have a superb corporate culture. They have a great safety culture. They are probably the best new mine construction company in the world. Note, too, that they pay real attention to geography. They operate in countries that they know and do well in. Canada, of course, being the foremost. But they're also a very, very skilled Mexican miner, understanding Mexican sociology and Mexican politics extremely well. The corporate culture is, I think, why Barrick leads the industry in return on capital employed and in all-in sustaining costs. Note, too, that the company has less than half the turnover of other major mining companies. People like to work there. You don't need to train employees who have worked with you for 15 years. This says an awful lot about the corporate culture at Agnico Eagle.
Got it. Okay, we are going to take a quick break. We're going to be back with new picks from Rick Rule in a moment. Stay tuned. Welcome back. Time now for new top picks from Rick Rule. His first one is EMX Royalty on the TSX. Can you tell me a little bit about EMX?
EMX is another of the prospect generators. They use their substantial geological knowledge and entrepreneurial acumen to stake large-scale exploration projects around the world and then farm them out to other people, getting a carried interest. Increasingly, the carried interest that they enjoy is a royalty interest rather than a carried working interest position. They also, from time to time, buy operating royalties. I suggest that the company is selling at a substantial discount to the value of the existing royalties, and I would argue that there is substantial upside around the Timok royalty in Serbia, where the operator, Zijin Mining, has 11 or 12 rigs running on a new discovery. With EMX royalty, the growth is built in. Note, too, that as a consequence both of free cash flow and deferring exploration expenditures, or rather laying off exploration expenditures on third parties, the company has absolutely no need to issue new shares. Note that I'm a very, very large shareholder of EMX royalty, having been a founding shareholder of the company over 20 years ago.
What's the difference between carry-on and royalty?
The carried interest is something that when they develop an exploration project and they sell it to another company, often what happens is that the company retains a minority working interest in the project, say a 30% interest in the project. So they're responsible for 30% of the capital costs. They're responsible for 30% of the operating costs. In a royalty, you have a smaller interest, but the interest is a net interest. Say a 4% overriding royalty gives you 4% of the revenues with no responsibility for the operating costs and no responsibility for the capital costs.
Got it. Okay, let's get to your next topic, which is Origin royalties. TSX, tell me about Origin.
Origin is a company that's similar to EMX, except for that a transaction has occurred where Origin is selling one of their royalties to Triple Flag Royalty for stock. One of the things I like about this is that the transaction value right now values Origin at less than the amount of Triple Flag and Origin stock that you will get. In other words, there's a merger arbitrage in play. I also believe that the transaction is accretive to both parties, which is to say the Silica royalty, which Origin has sold to Triple Flag Royalty, is such a profound royalty that I think it will impact positively the shares of Triple Flag. I think you're being part of your assets are being acquired in a stock that will go up. I also think that the spinoff, the new Origin royalty, is substantially undervalued. I believe that holders of Origin or new holders of Origin should take the share option rather than the cash option. And I suspect that they will be more than happy, in fact, very happy in the 2 to 3 year time frame from the performance of both of the Triple Flag shares and the new Origin shares.
Got it. Okay, I want to get your last pick at this time, which is Sprott, which is a play on uranium.
The Sprott is really a play on natural resources. Note conflicts of interest. I'm a former employee. I'm a former director, and I am the current largest shareholder of Sprott. I own almost 10% of the company. I suggest Sprott because I believe that we're in a precious metals bull market, and I would argue that Sprott is a financial services brand name for gold and silver. In addition, they are active in many other materials, including the Sprott Physical Uranium Trust. So they have good exposure there. What I particularly like about the company is that the assets under management now are about $40 billion and growing fairly rapidly. There will come a time, if I'm right about precious metals and natural resource markets, where Sprott's AUM looks more like $80 to $100 billion. And at that point in time, their free cash flow from management fees will be enormous. And I think that they'll be an irresistible target for a big financial supermarket, say a UBS or a Manulife.
Okay, so talk to me a little bit about their uranium portfolio, because with nuclear going the way it is and this need for power, will they be benefiting from that?
Absolutely. Sprott runs the Sprott Physical Uranium Trust, which is the largest holder of physical uranium in the world. And they also operate 2 uranium equity ETFs. I would suggest that in addition to being the financial services brand name for gold as a consequence of the Eric Sprott legacy, that they are also a financial services brand name in uranium. In fact, on many days, the Sprott physical uranium market is larger than the spot market in uranium. One could say in uranium that the Sprott market is the spot market. That's how important they are. In addition to that, they're moving into industrial materials markets. They're moving into rare earths markets. In other words, they're expanding their franchise from precious metals through uranium to the whole natural resources complex. In addition to that, if you think about Sprott as a mutual fund, I guess what I would say is that you have the diversity of a mutual fund, but rather than charging you a fee, they pay you a dividend. Pretty good arithmetic for investors.
And out of curiosity, where are they looking at getting into the rare earths geographically? Whereabouts are they looking?
One would suspect non-Chinese, given the fact that the Chinese consider rare earths to be a strategic material. It's worthy to note that rare earths aren't really rare. We just haven't looked for them for years because of the efficiency by which the Chinese produce them. But any area of really ancient rocks, say the Abitibi or the Canadian Shield, say Wyoming in the U.S., say certainly the Carajás region of Brazil or Western Australia, I think you'll see Sprott probably first of all emulate, perhaps in private fashion, the physical trust, which is to say raise institutional capital to buy physical rare earths and other physical industrial materials before you see them do a public product.
All right. I got to leave it there, Rick. I'm out of time with you, but thanks for your time. And thank you for watching Market Call. We'll see you again tomorrow.